According to supply managers in the 9 Mid-America states, how is the economy performing?
Creighton's August 2022 survey of supply managers, manufacturing supply managers in 9 states stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, that overall reading fell from July's 59.8 to August 55.5. Now that's still a positive reading. I would call it a solid reading. As you know, the indices range between 0 and 100, and 50 is growth neutral. So this is above growth neutral at 55.5. We asked the supply chain managers to identify the biggest challenge they see going forward in 2022. 58.6% of the supply managers named supply chain disruptions. Labor shortage was named by 24.1% of the supply managers. Higher inflation was identified by 10.4% of the supply managers. And finally, higher interest rates, that was identified by 6.9% of the supply managers in the August survey. Here I brought up the chart over the last 18 months of the manufacturing supply managers indices. That's the overall indices. And as you can see, it's dropped to this lowest reading, 55.5, in the last 18 months. And that's slid from March. It's been sliding pretty consistently over that time period. The US number will come out later on this morning. Last month's was 52.8. I expect it to probably move below growth neutral for the month. So I'm expecting that to be not so good when that comes out later on this morning at the US number.
What were the hiring trends?
Hiring for August was just slightly above growth neutral. The index was 51.8 for the month of August, and that's down from July's much stronger 58.7. On average, supply managers expect a raise of 3.2% in their next raise period. That's down from 3.5% that we recorded last month. So the overall outlook in terms of raises is not looking good for the supply managers in this part of the country. Regional employment is now down by about, we're moving back almost to pre-pandemic levels. We're at about 0.7% below pre-COVID-19 levels, and that's about 94,500 jobs or workers. And U.S. employment is actually up from pre-pandemic levels, but only 0.02% for compared to pre-COVID levels, and that's up by 32,000 jobs. And Arkansas, Missouri, Nebraska, and South Dakota are back to pre-pandemic levels. And that's seasonally adjusted. We're talking about seasonally adjusted levels, and that's non-farm employment. So again, we're still not there for the states, for the other 5 states in the region.
What inflation trends are you noticing?
The inflation gauge keeps moving lower. That's the wholesale inflation gauge for August was 76.0, and that's down from July's 82.8. I expect inflation to soften in the months ahead, but remain above 6% through third quarter of this year, well above what the Fed considers to be their target. Their target, of course, is 2%. So 6.5 is well above that. Short-term rates, I expect to rise by another 1 percentage point by the end of the year. We need to watch individuals, investors, consumers out there need to watch the monthly tapering. The Fed is beginning tapering in September, $95 billion of more they're going to allow to mature or even sell $95 billion worth of mortgage-backed securities and U.S. Treasury bonds. So that's going to move short-term rates and long-term rates higher.
What is the economic outlook?
We're talking about, I'll call it recession diversity. Manufacturing is not in a recession. Residential housing is in a recession. I think the overall economy is certainly skating along, whether it's slightly above positive or slightly below positive matters not. It's still a painful economy right now for a lot of consumers out there and businesses. Inflation will remain above 6% for the rest of 2022. Economic growth will slow even for manufacturing. As I've said, manufacturing is stronger than the rest of the economy, but even it is slowing down. We're talking about supply chain disruptions improving slightly, and they did improve for the month of August, by the way. I failed to bring that out earlier, but supply chain disruptions are improving slightly. Short-term interest rates, including the prime interest rate, will rise by a half a point by the end of the third quarter and a full 1 percentage point by the end of the year. We're talking about again, the prime interest rate will move from 5.25% to 5.75% by the end of the quarter three of 2022. Long-term rates will head higher with tapering and continued inflation. Unfortunately, the Fed is not going to take the foot off the brakes. They are slowing the economy down by raising short-term rates and now long-term rates. Keep an eye on the bond market, particularly the 10-year Treasury. That yields has been moving up, and now it's about 3.11%, and that's reflecting higher and higher inflationary pressures. We'll see that increase by as much as 15 basis points over the next month. National ISM reading for August comes out later on today. That's going to be a very important reading for the bond market, for the stock market, and for others who are trying to gauge the economy. Keep an eye on the price of a barrel of oil. Oil is now moving sort of sideways between $90 and $100 a barrel. It tends to move up one day and down the next, but it's elevated at about $93 to $94 per barrel. That's going to be an important factor determining inflation and what the Fed does. Listen carefully to what members of the Federal Open Market Committee, that's the rate setting committee of the Federal Reserve, in their public speeches in the days ahead. Very important what they do, what they say. And as all the viewers now know, Jay Powell on last Friday said, hey, we're going to have to raise rates a lot more quickly than you expected. And of course, the stock market swooned after that. So keep an eye or an ear to what the Fed's saying and see what they're saying as well. So that's all of our survey results, our high level view of our survey results for the month of August. And until we meet again on the first business day of October, may your economic cup runneth over, and thank you for being with us.